to this month's Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's Fintech and finreg news. Now, it's been a busy start to October for ESMA in the EU with its annual work programme being released this month. So certainly a lot of discussion around the priorities or the changing priorities for the European Securities and Markets Authority and how it's setting the tone for changes across the region. One of the biggest focuses for ESMA in the coming year will be around data. So it's a big part of its approach for the ongoing 12 months, and it's looking at hosting its first ever data day. Now that's going to be on the 2nd of December, and they're going to be talking about reducing the burden of reporting and how to make reporting smarter in the era of digitalization. So using a lot of buzzwords, but certainly an interesting dynamic for the regulator. There's a big focus on reducing duplication across different regulations and reducing inconsistencies as well. If you remember, we had some issues with regard to things like transaction reporting early on, between distinctions between MiFID, EMIR, SFTR, for example. There was some disparity because those regulations were drafted in silos at the European level. So I think there's been a big turnaround at the EU level to try and reduce some of the duplicative work that firms do to produce those different reports for each segment of the market. There's a really big focus on how to look at data in a holistic manner. So it'll be interesting to see, particularly on the technology usage by the regulators, how that differs from the industry approach to a lot of this stuff. As you know, there's been a lot of industry investment in data technology over recent years. Started on the sell side. Now we're seeing a lot of buy side firms focusing a lot more on data as well. Lots of strategies around that, and wealth managers as well. So certainly interesting to see if the crossover between all of the different demographics, including regulators. Now, the other priorities for ESMA into the year is just not just data. They're also looking at their supervisory powers at the EU level and how to better enforce those, particularly in certain markets that are particularly risky on a cross-border perspective. So crypto asset markets, as those grow, particularly as tokenization takes off potentially. So there's a real focus on some sort of framework that the ESMA can lean on to improve enforcement across the different national competent authorities or the national regulators. And we're also going to see some changes with regards to policy as well. In the US, we've seen a real bent towards deregulation or trying to reduce the amount of regulation that is burdening the industry. ESMA is saying similar things here. Focus on consistency, clarity, and proportionality. So maybe not quite as aggressive as the US regulators, but certainly an interesting dynamic as well to be monitoring. Now, I can't talk about regulation, and particularly in the US, without addressing the shutdown at the moment. So there has been a government shutdown. That means a lot of the enforcement agencies, including the SEC and the CFTC, are sort of running a skeleton crew at the moment. So not a lot of work is getting done. We also note that both the SEC and the CFTC are relatively short-handed at the moment, especially so on the CFTC front, where we only have one commissioner still. There seems to be, we had rumoured that Brian Quintenz was up for nomination to be the chair of the CFTC earlier in the year. It seems now that that's what came under some degree of scrutiny by the industry. There's rumours that the Winklevoss twins were behind the retraction of that nomination, and now there are other names circling for new CFTC chair. Some of whom already work in the crypto industry, very crypto-friendly faces that are being pushed forward for that particular role. We're also seeing with the SEC, they are also short-handed. They only have one Democrat commissioner at the moment, so they need another one to be appointed to balance out the SEC. So it'll be interesting to see, once the government shutdown ends, how quickly movement starts towards appointing those commissioners and the new chair of the CFTC. Given the very, very aggressive timelines and dockets related to crypto asset regulatory changes, this comes at a particularly poor time for the industry, where we're waiting for a lot of confirmation of different rules and requirements coming out, particularly as both the SEC and the CFTC have got crypto focused initiatives, Project Crypto, the crypto sprint that the CFTC is doing. So they're less of a sprint, more of a slow jog at the moment, given all of the very big challenges ahead in terms of staffing. In Asia, we've seen some very interesting developments related to quantum key distribution, which is when you talk about quantum computing, this is about preventing cyber criminals being able to hack or take advantage of quantum computing when it ramps up to be able to decode encryption or get past encryption that is being used within financial services. Now, the Monetary Authority of Singapore has been very active on this front over the last couple of years, has been collaborating with different banks in the region and some of the specialists in the quantum space, particularly in the quantum encryption space. So earlier this month, or last month actually, late last month, it worked with DBS, HSBC and a few other banks and different tech providers to complete a proof of concept sandbox in which it was evaluating quantum key distribution for secure communication in the financial sector. So nice to see some progress there. As I probably mentioned last month, we saw HSBC doing some interesting trials with quantum computing outside of the realm of cybersecurity, but more in the realm of risk management and using quantum to be able to speed up its calculation process. I expect over the next couple of years, or even in the next couple of months, we may see more interesting public examples of quantum. It certainly was a big topic at Sibos this year in Frankfurt. At the end of last month, where the industry gathered to discuss all of the upcoming topics within the securities realm as well as the payments realm. Less interest to me, but certainly the securities discussion topics involved a lot of quantum computing. Interestingly, IBM had a session in a tribe where they discussed the potential timeline for when quantum computing or quantum security threats may happen. They projected out to 2030 being when we'd have sort of a red zone of danger. Between 2030 and 2035, they highlighted as a key risk horizon for firms to take into account. So that means you need to start thinking about your own, whether you're a vendor, whether you're a bank, whether you're a consultant, anyone in the industry, and the regulator as well, thinking about quantum and how secure your organization is with regards to those future developments. So that is definitely going to be a big topic going forward. There were lots of interesting topics. Quantum was not the only tech topic, as you can imagine. AI or agentic AI was a huge topic this year at Sibos. Many different sessions talking about how we will move from human-led processes with assistants, where we have co-pilots and the like at the moment, through to a multi-agent environment where humans are really the supervisor in the loop. They oversee all of the different functions that are performed by agentic AI underlying their remit, I guess, is how you would put it. So that's a huge change to staffing, responsibility, the way that governance would be implemented within an organization. So certainly some really big topics there. Unsurprisingly, given all of the crypto stuff that's going on globally, tokenization was also a huge topic, particularly related to collateral tokenization. DTCC, for example, were chatting about their experiment earlier in the year, and there is a lot of movement with things like HQLAX. So certainly we are seeing certain discussions, even in the US regulatory community, about the impacts of stablecoins and collateral as a sort of a killer app for tokenization. So we expect a lot of movement on that going forward as well. And my quick final thoughts for the month relate to the fact we are now 2 years away from the implementation of T+1, trade date plus 1 day settlement in Europe, or the EU, Switzerland and the UK. Given that was this weekend on the 11th of October. So we now really have to get our sort of organizations in gear to be able to make sure that we have enough budget. We have scoped out what needs to change ahead of time. Next year will be a key implementation timeframe for all financial institutions. I'm doing a lot of webinars at the moment, so please do listen to those related to market structure change, in particular T+1. But we also saw some progress on the front of the regulators this month. The FCA has been blogging about its outreach program to buy-side and sell-side firms in the UK and what it's been discussing with them about their readiness. It's making its own little assessments of each individual firm. At the EU level, ESMA has now proposed its final recommendations for the regulatory technical standards, or RTS as we call them, to the European Commission, so that the European Commission now has 3 months to decide on their adoption. But those recommendations include using machine readable formats for allocations and confirmations, which was long expected. Also looking at timing, same day timing for trade allocations and settlement instructions, so sending everything on the date of trading. And there's also been some discussion about the mandatory implementation of things like hold and release, auto partial settlement and auto collateralization at the market infrastructure level. So we are expecting many changes ahead. We will see much more clarity from the Commission on what it will be agreeing to in the coming months. So expect more discussions from me and everyone else going forward.